Welcome to PhillipCapital's weekly market watch. Commodities have been hitting the headlines recently, especially for the surge in gold prices in May this year. Today, we have Mr. After Sandhu, Asian Commodities Manager of Phillip Futures, to talk about his outlook for commodities in the near term. So After, most commodities like metals and energy sectors have been soft lately. Do you see them weakening further?
The weakness in metals and crude oil started with the SEC's investigation into Goldman Sachs. At the time, most commodities like metals and crude oil were already overbought and at recent highs. The sell-off was in many ways an expected reaction to the alleged fraud. Other macroeconomic factors such as Europe's credit woes and the Chinese reining in of the property market have further dampened demand. Metal prices are further vulnerable to losses in the short term as Chinese growth moderates and high inventories for crude oil, especially the WTI, is putting a damper on prices of oil for immediate delivery.
Gold has been bucking the trend. Why is it so?
Gold, besides being a commodity, is also considered a store of value and a hedge against inflation. There has been a strong demand for gold lately, especially in the ETFs like the SPDR, which are seeing record assets. This demand is underpinning prices. However, the rally in gold seems to have stumbled as investors lock in profits. We see further weakness very near term, but this would only be a correction as the current fiscal weakness in Europe is not likely to dissolve away shortly. Gold may drop to $1,130 an ounce, where we expect gold bulls to support the market, but expect excessive long liquidation given the passing of the financial reform bill by the US Senate, which would place restrictions on trading.
How do you see these fundamentals of other products like the soft commodities?
It varies for different products. For example, sugar's output is expected to recover in India, where the production may jump at least 24% to 23 million tons in the next season. The expectation is for raw sugar to trade 13 to 16 cents a pound near term. And unless a major weather issue turns up, it's more of a sell on the rally setup than otherwise. As for coffee, the Indonesian and Brazilian harvest is coming in and is expected to put a damper on prices. We expect some selling at $1.40 a pound for Arabica coffee on ice NIBOD.
What about others like the grains, for example?
The grains market is going through an interesting phase as the planting season is underway in the US. Near-term bearish fundamentals have been weighing on CBOT soybeans, with the outlook for a rapid increase in planting progress. Slowing export and poor domestic demand is also capping topside. Corn's fundamentals are relatively stronger on expectations of strong demand from China and disappointing crop progress. Technically, July CBOT corn has strong underlying support at $3.55 per bushel, which fundamental has also been unsupportive due to large supplies, but the markets appear to have priced in the bearishness.
Thank you for your time, After. That's all we have for you today. Join us next week for more market updates.